Good afternoon, everyone. Let's continue to discuss this paper, CFO Social Capital, Liquidity Management, and Firm Value. A lot of the paper addressing the issue about cash holding, but very last paper examine the cash holding relationship with CFO Social Capital. So this is a very new angle in this field that contributed to the literature review about the board directors' connection. So this paper have the publication space for the new angle. And in the first beginning, our introduction and for this paper will include in the background. Why cash policy and the CFO social capital matters in this field. And we will discuss a literature review, a little bit about the research gap for this paper, and data construction, and the main results and robustness tests. And I will criticize or give some comment for this paper too. And some Slido. The opening puzzle, this data actually very old, right? Only into 2013. So during the period, the paper exam, almost on average, every firm hold a high level of cash holding. On average, you can see it's 21%. It's on average, but for Apple's case, it's much higher than that. So most of the firm make money, but part of the revenue was saved abroad, not remitted to the domestic country of the United States. So this trend has been increasing and increasing. So a lot of paper during that period examine the cash holding issues. And you can see that the median only 13. So that means there have like a Q4 firms that extremely high cash holding maintain. So on average, your mean is larger than the medians, 50%, but only like a Q for firms that have extremely high cash holding. So the puzzle is if cash is insurance and is a valuable insurance, why do some firms with connected CFO hold less of them? If this is an insurance, then I have a connection, I should hold much higher, right, rather than lower. So the paper actually have some angle, because if cash is low return, and there have some problem for high cash and low cash. For example, if a firm hold extremely high cash, what would you say if you are investors? Why the manager do not find the opportunity to invest, right? So they have a moral hazard concern. This is an agency problem too. So they have a lot of concern for high cash holding firms. Moral hazard, agency problem. Why underinvestment? So cash is a low return, so will worsen the agency problems, and it's not only the liquidity problem too. But for precautionary motive, hold much higher cash can protect investment and the insolvency when external finance is costly. So they have an advantage, but they have some disadvantage too. So they have an angle right? If you're high, may have some concern about moral hazard. But if you're too low, then precautionary insurance is not enough. So high and low have a trade-off. They have an optimal level. And this optimal level will have no concern once a firm have a CEO, CFO connected tight. Once the CFO finance industry connection exists, this trade-off will not be a concern. Too low will not be a concern. And if too high, it probably not exist. So this problem will be dilute a lot. So the paper asks whether CFO social capital act as a substitute for cash reserve. And 1 minute, CFO tied to finance can reduce cash, the question, and using data for 30 years, 12,000 observations. And then they find the result is connected to finance industry. CFO hold less cash on average, and this fall by like 1.7%. It's much larger if you compare with the mean. It's about like a 13%. The coefficient is 1.73, but divided by the mean is like 13%, a large magnitude. And network partly substitute for cash implication is that. So the background is, I just mentioned the stories logic. So in frictionless or in information asymmetry market or excess cash may destroy value and trade off to balance self-insurance, whole cash, and once external financing is costly, then external flexibility. So you have to balance both insurance or costly financing assess. Also, this paper matters on cash. And there are some literature review. I mentioned 3 because Opler say whole cash is for 3 motivation, right? Transaction, precautionary, and another is like a speculation. So you have 3 motive to hold cash. But this paper only focus on precautionary, prevent, or insurance. And Bate papers, 2009, is a very nice high citation paper. Display that U.S. firm increasingly hold high cash over time during that time. So it's a very similar period, right, about this paper. This paper is to 2013. But 2009, the picture already showing significantly. Finkelder and Wong also after that showing marginal value of cash is higher when firm are financial constraint. So you guys present a KZ. So the KZ is measure a firm's financial constraint degree. Higher KZ means higher financial constraint. That will make the marginal value of cash different. So the paper's implication is if network relax this constraint, so the paper find both cash levels and the value of cash should decrease, right? So let's continue to see the paper's design. They design the executive network, CFO and CEO. And CFO matter more than CEO. The papers put two executives together and find only CFO is significant on reducing the cash holding, but CEO is insignificant almost all over the panel and equations. So the research gap is so far no direct test on these two executive role on the paper. So the paper connected to the CFO finance industry ties. And find that the connection change both the level of cash and the market value of cash. So it's kind of a significant contribution at that time during the 2013 period. Question 1, does connected CFO really hold less cash? Yes. The table we will show, we will see that. It matters more than CEO. Usually you ask a question, the answer should be positive. So when you write something, you guide the readers to the answers. So when you ask one question, usually the answers are always yes. And research question 3 is, how do investors value cash when CFO is connected? So you have to design the model. So the underlying mechanism is social capital reduce information asymmetry because you have this connection with potential financiers. Usually like a loan or private debt rather than issuing on the market. Even though it's also allowed, but private equity, venture capital, or private loan is much better than the public debt in total. Okay, so this is the paper's research question. But here I want to say something about the social capital. This paper only used one concept, which is the network connected to the finance industry. But actually, it's not enough. Social capital actually included CFOs in the company, the trust, whether you get some trust, the CFO reputation, the second one. And also, social capital is not the numbers of the connection or whether it's connected to finance industry. You also have to measure the quality of the network. So each connection may have a different quality, but this paper ignore all of them, only count the number, but ignore the trust, the reputation, and the quality of network. Okay, so the conceptual mechanism of how CFO social capital work to external, because soft information troubles, and then asymmetric information problem reduce. So assess external capital becomes easier and lower cost. So it doesn't need to hold a lot of cash on hand. So this is the logic of the paper. And the paper using both that for the director's connection, compute state for financial statement, CRIPS for the stock return, excess return. And also they are using S&P credit rating for like a big ask, right? Transparent or non-transparent. Information transparent or transparent. And the deal scheme for the loan interest rate. Okay, so all these database have to be merged together to do some further exam. Very short period and out of date, actually. It is old period. And in total observation is enough. Sometimes we merge data with different code, different database. Every step, you will lose some valid observation. In total, you might have like thousands. Like this, Bordex, millions of the connections. But when you merge with compute state and CRISP and Bordex, you only screen those CFO, CEO data. It will reduce to limited numbers. So this is still a lot observation, have some stories inside. And the paper is showing that 9.4% have the CEO connected, CFO connected tied. So let's take a look at the tables here. This is 12,000, right? So CFO industry connected 9.4 only. But if we count the connection size is 1.15. It has been transferred to like a log. I remember it's probably the log, right? The log is 1.153. Take a log is 1.1. So you have to use the exponential power, E exponential power 1.15 to get the original connection size. And here is the number of the cache. So 21%, extremely high. And interesting, bankers on board have 11%. Have 11%. And direct finance connection size is like 11. But I recount these numbers, which is also different, because it say that it's a 1.15, and the next page I use in like a exponential 1.15 is a 3 connection, but using log it should be 14, right? Like a 14, like 14. But here it say that it's like a connection size 11. So I'm not quite sure. My calculation is different from the authors. If this is a log, take a log, should be like 14.2020.22, but different from the original table. But it's fine, okay? It's very close. And we can see the key variable, 21% cash, 9% connected to CFO given domain, and this is the number of die, which is 1.15, transformed to the real number is 14 around, and control for the control variables and the stock return. Clear, right? I take NVIDIA, for example. I have a curiosity about this firm. So I checked the website. This is the board director of NVIDIA. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only 10 members on board. Small board, right? Not like a 20. And Jensen is a co-founder and the CEO. I check all the term. Can you guys find CFO here? Huh? See, this is Li Lai Yao Chang. This is another board directors for digital. Have you guys find directors also serve as the CFO? Did you find that one? No, right? So that means NVIDIA, the board director actually, CFO does not serve as a board directors. No, only Jensen Huang is a CEO and also serve as the board directors, but the others are professional board directors. And by the way, I check Jensen Huang's employee history, and his network size is like 2,000 more. It's actually not extremely large. You can see some CEO have like 5,000 more plus, 5,000 more on average 5,000 more. But Jensen Huang does not have such a large connection. But his employee history is interesting. I mark this one. It's like a 2013. 10 more years ago, actually, Jensen Huang also served as a CFO. During that time, he's not on board, he's not board director, but he has been a CFO and played as a role of financial officer during 10 more years ago. So it is very interesting when you can serve as a firm CEO. Actually, you have a lot of experiences, right? You have a senior VP network, directors, senior managers, and actually they have a lot of scientists, data center scientists, expertise too. Because his story has thousands of pages. I only pick some interesting one. He's engineering orientated, but finally get into finance, get into general management to manage the whole firm, rather than focus on engineering. But he has been an engineer vice president before, and switched to CFO, and then switched to CEO. So these papers have a very surprising result when I read this paper, because it say that CEO is insignificant, right? But for my personal point of view, I think CEO is the top level. If they do not have this lower level or the other dimensions training, it's very hard to get a CEO. So CEO actually covered maybe half of the company's functions before. So it is insignificant. I was very surprised about the result. And the model is very simple, cash holding dependent, and using two executive connections, CEO and CFO, no COO. And we can see the tables here. CFO finance industry connected was significantly and negatively related cash holding. But CEO shows insignificant signs, even though it's negative, but insignificant. So compared with CEO, CFO have much power on liquidity management or assessing external finance. And interestingly, bankers on board. I did not see NVIDIA have bankers on board too, right? They're all professional, like digital, marketing, but I did not see any finance because Jensen Huang actually had been a CFO before. So he probably doesn't need additional director as a CFO. Bankers on board always significantly and negatively relate to cash holding. So if you want to keep low cash, this could be your reference, right? CFO connected to industrial finance, or you just hire bankers on board. That will be a direct way. In every model, Model 1 to Model E, it always shows the consistent sign. No matter you control for the control variable, fixed effect, or the others. So this is the result. CO insignificant, CFO significantly and negatively related to cash holding. And in general, if we combine both, then we can get significantly too, okay? Because it's diluted by CEO very little, and it's showing the power of CFO. CFO dominate the results. And convert it into the percentage, even though it's 1.73, right? We'll go back to this one, 1.73, right? And then for the CEO, it's insignificant, and in total, it's like a 4. So we can go back to calculate the percentage. Okay, so we can calculate the percentage divided by the mean. The mean is like 13. So we can get like 13% less cash if you have that connection, CFO. So this is interesting results. So similar magnitude to moving from the first to the third quintile of firm size. Okay, so if you change the firm size, yeah, the magnitude doesn't change, but just increasing, but did not change the sign. So identification strategy, because this paper did not have like an IV, right, instrument. You don't have an instrument, but you can do instrument, also do causality test. You can do both. If you cannot find the endogeneity property using IV instrument variables, you can directly use identification strategy called causality test. Pick one event. So the event is CFO turnover. But the turnover have many type of reasons. Sometimes your performance is not good. You are forced to resign, to depart, to leave, right? So this is another kind of the event because it's not nature. We cannot expect the result or assign who do something in the future. We cannot predict every kind of situation in the future. That kind is experimental. If everyone already know, or you can predict, that event will not work. So poor performances will be forced to leave. This sample have to be removed from the original turnover sample. So they only keep routine departure because this sample will not be predicted and will not related to performances. It will more clean that we can do the difference in differences analysis. Because of death, you cannot predict, right? Because of retirement, maybe you can, but you will not predict when this one will submit to retire. Like in America, the company or the professor do not have age 65 age limit. So many professors serve as a professor till 82, 87. till the professor want to submit the retirement plan. So this is the reason why the retirement can be used as a design. And the other career move, maybe switch to better for with better salary or compensation. So you never know. So this is a routine, including in the sample, CFO turnover. So deducted from the fourth one, only 137 routine CFO turnover in the treatment sample. Very, very little, small sample. Because even though they have a lot of turnover, but after screening out, we have to using propensity score matching, right? And the treatment group and the control group, actually our treatment group only, very little, 137. And this is the sentences I copy and paste it here because I have to let you know this is such an important paragraph in the paper. If you cannot explain or explain the details about what and how did you conduct this experimental design, the paper will not be accepted. So routine, sudden death, one. Retirement is nature, not force. Taking another job, you're switching, right? Or many others, like the fourth one, it say that's 2 cases, right? There have some convincing reason, maybe health reason or something, not related to performance. It can be accepted. So you have to check the news, Bloomberg, Google website, or the company's website to see what's going on. They have a force or remove, or this term will not be your sample for the treatment group. Very small sample is the treatment group. And then we can see the result. After the turnover and the treatment group have a lower cash compared to control group, it already increasing or higher or increasing. It doesn't change to, it's different from the treatment group, which is decreasing, right? In year 2, you can see significantly negatively to the cash holding after the turnover. So the treatment group have some power here. So after treatment, after retire, after turnover, and the treatment group significantly have a lower 6.67 magnitude cash holding decreasing. Okay, so this is the result control for interaction post and treat and interaction, and also control for the CFO network size. So this is the same one, but just one thing, because it is, we are hoping that the 2 lines can be parallel, right? Like this kind. But actually, this has a direction which is correct, but it is not reached to the higher standard, which is parallel, not parallel. The parallel should be like in the first beginning, before the event, we both actually don't have any significant difference because only constant difference, right? Coefficient doesn't have a significant difference. But this parallel trend actually not the perfect one, but it also shows the story very clear. We are hoping that we can get like this paragraph, parallel trend. But as for the market value of cash interaction delta cash means $1 of cash with interconnected CFO relationship. How was that impact on the excess return? If it is positive, that means $1 cash increase will have a positive excess return on firms. Also, this is another design for the market value of cash. So here we can see the result, the paper showing that. Interesting. Every dollar increase with this connection, actually, your excess return deducted the risk-free rate, right? This is the market model, so deducted the risk-free rate. So this is the excess return. So we can see that every dollar increase, the value, excess return is decreasing. Did you predict that sign is negative? This angle you must convincing yourself, not me. If you cannot convincing yourself, that means you haven't totally understood this kind of concept. The excess return, the paper using to measure the value of cash, $1 increase, the excess return for this value is significantly negatively related to excess return. So what does it mean? If a CFO, because the connection mitigate or reduce the financial constraint, right? So if I have no financial constraint, then the value added means the incremental cash value. The value added becomes less. If I have financial constraint, then this value is getting higher. But without this financial constraint, then this value was added less. So we can see the negative, negative, negative. Think about the logic with this connection. And the paper also using KZ index. This is the same index to measure the financial constraint. So we can see connected the CFO lowered the market value of cash in main interaction in economic interpretation, like a 46% divided by the mean. And these negative signs still remain after control for the fixed effect. So nothing changed. Okay, so take a look at the KZ. We can see if you add a KZ, robustness, the same. If you connect it to bank lending, which one? You can bank lenders connect. Lenders connect. This table showing the negative sign, but some of the coefficients does not significant. Part of them are significant negatively related to the dependent variables, which is the asset return. But some are not, so I did not spend too much time on this. And this is another one. It's the same result. Usually it's negative, but because of some model, depending on your control for the others. Connection negatively, bankers on board doesn't change. So excess return negative. CFO itself negative. detrended negative. Usually the story doesn't change. So this is, let me ask you, give me the answer, is stronger or weaker? The result for smaller foreigner, this result is stronger or weaker? Hmm? And for the less transparent firm, the previous result is stronger or, I mean, the negative is stronger or weaker. And for the post-crisis years, stronger or weaker? Who did not speak anything today? Lin Peixian. Smaller firm, stronger or weaker? We just showed the negative, right? All negative. And strongly for the smaller form, predict. Huh? Stronger, yeah. Less transparent. Ye Jin Shuang, you. You can guess. If transparent, the finance connection. And the marginal value of the cash. For the smaller is stronger, for the less transparent is one word, stronger, weaker. Weaker. Think about that again. It's stronger or weaker? Less transparent. Transparent is like a big firms, right? Maybe. Less transparent is similar to like smaller, stronger, right? So this post-crisis constraint is getting harder. You, Li you, stronger or weaker? No, stronger. Okay, so you probably already know the direction and the story. Okay, so test a different robustness test, and this is the hypothesis and the results. Okay, large firm, and they do a lot. I don't think that we need so many dimension, but it is also working for the paper. Location and expertise. Okay, so junk bonds, high return, high risk. Okay, that means junk bonds. It's not like a garbage bonds. It's not. High yield of return, high risk, high yield to maturity, and high return. This is junk bonds. So we call junk bonds that are high risk but high return. Many of the investors love that. I don't need AAA because of low return. I can take like a B plus or like a C plus, high risk but high return. So junk bonds have the other no strong effect for the junk bonds. Okay, so this is very strong. If for junk bonds also showing that, we cannot say too much. Okay, so lower cash, lower value of cash, integrate the story into social capital of a CFO. This is the main story of the paper. So have some contributions, of course, but actually there have some comments and criticism. I did not, write down it too much because it already published. But in my personal point of view, it's a social capital. They use the term too broad. If social capital, you have to, much more completely actually value reputations or like trust or the connection quality. Have to mention a little in the paper, but this paper doesn't explain any of them. And the term period is quite short and very old, and because it skipped the post-COVID, so this is not convincing to talking about the post-COVID crisis story. And also Bordex, even though the paper is saying a lot of the steps how to collect, I tried to use their step to collect one. I couldn't reproduce the results. Using their guideline to collect the data, I couldn't match the same one. So that means that the constructions guidelines was not completely being well organized. And okay, slide 1, we can do something. Like 1 minute, we have something. What's the, wait 1 second. Do we have the network? Yeah, I just 1 minute. What's the problem? One minute, probably is the network. Okay, the network is fine. It does not work again today. Okay, it's okay. Then you can let me know your answer too. If you pick the most convincing mechanism is 1, 2, 3, 4. Convincing mechanism. Your answer is 1A. Raise your hand. If your answer is A, raise your hand. Your answer is B. Raise your hand. C. Low-level inference or Bank-Hornburg effect. D. Can multiple choice. A, B, equally distributed. Okay, interesting. The most convincing mechanism because if you only want to pick one, in general, I think A probably cover B and C. The soft information means the connection, close connection, soft information. So it's probably on that way. But B, C also are also correct. And okay, and then this one, probably yes or no, or maybe. Raise your hand. Can you see that the board value of CFO social capital explicitly or implicitly, hidden or explicitly? Yes? Raise your hand. Okay. Maybe raise your hand. Okay. And no, raise your hand. Okay. Yeah, most of you vote yes. Okay, that's probably the same. Okay, and then the next one is for your reference, because this paper can do a lot in the next class or next semester if you are interested in. So there have a lot of issues can be extended based on this paper. So I just random selected some, possible direction that you can explore more if you are interested in. Okay, today's class will end here, and thank you everyone for your presentation and provide very nice cases and examples. We will see you next week, okay?